Guys, I warned you. Those rallies in the S&P 500 into the overall market is temporary. If we are looking into the futures, they are obviously deep red. I think we are going way more down. Some people say, oh, are you still holding space? Yes, I do. I buy every month. So before we diving into the content, let's talk about GSX. As you know, Apollo Fintech team, those guys behind this crypto project are adding gold assets, mines, and they are growing like crazy, guys. Just recently, the value of GSX just doubled just because news of a new Zimbabwe mine getting added to the asset. So you can get your hands on GSX on the Bitmart crypto exchange, or just go with the link in the description and pay by credit card. Get your hands on GSX. Guys, I warned you. I really tried to warn you. Those rallies that we have seen in the last couple of days in the S&P 500 into the overall market is temporary. Okay, specifically when we are in a bear market. Bear markets are exactly like that, right? I mean, look at that. Let's have a look what happened yesterday. If we are looking into the futures, they are obviously deep red, and I think this is not even deep. I think we are going way more down. But other than that, you see what caused it. It was like one small downturn of one of the big 5 S&P companies, right? Like Apple, Facebook, or Meta, Amazon, Google, and Microsoft, right? And Facebook just absolutely demolished after hours, 21% negative. Maybe that's 21% positive in the metaverse. Or it's a 4 to 5 stock split. We never know, right? But it seems like it's deeply red for today. And this is giving us like a chain reaction, okay? Because not only the S&P 500 was on a very important technical level, and here I will show you one of the interesting traders out there who is called this out actually, and multiple other stuff. His name is Root Trades. And if you're going down, he actually posted this that we're having in the 1 hour chart in the S&P 500 decision to make, okay? Here you see the trend line that is following here, and then around 4,000, let me have a look. Is it this the right chart? Here we go. Here you can see the decision was at 4,580 somewhere around, and the S&P 500 closed a little bit to that, right? I mean, yesterday, if we are looking into the S&P 500, you see that we actually closed above that, but this doesn't count if the next day, you have this huge selling pressure in the S&P 500 because Facebook is a huge part of the S&P 500, right? Let's have a look. Maybe I just put Facebook. So you see the whole process that I'm doing, okay? So, okay, Facebook is down. What are the technicals are saying? What are the great traders on overall Twitter are saying, and then, okay, look into the weight of the Facebook into the index, which is here 1.97. You can actually have a look here, S&P 500 companies by weight on the index, and then you can see seventh big company. And then, obviously with this kind of tech drawdowns, you are having also Google was great yesterday, but will sell off a little bit of profits. Other companies in the same business will a little bit sell off this, huge sell-off. Maybe we will see Amazon, after the earnings today also crashing. There's mixed data as of now. I can show you that as well because this is quite interesting. Gurgevin is another fantastic guy on Twitter that you should follow, and he actually put it together that there's mixed. This is a great meme, by the way. The stock market is held by Amazon earnings tonight. And he having another summary and tweet that he wrote, Amazon earnings tomorrow, mixed signals everywhere. Year over year, e-com website visitors down 30%. Record credit card spending on the other hand, a new Black Friday shopping record, right? Then multiple Amazon Web Services outages. We had always, headlines that the internet at some parts are not working because Amazon had some outages. So maybe this will also be weighting on the revenues as well. And computer clouding business up 40% year over year. So, good and bad signals. So let's have a look how this will end tomorrow. But tomorrow is also Friday, and we have the overall geopolitical political situation with Ukraine and Russia. So it's very, very hard to see what the next 2 days are here for, but it looks not good, okay? And I shared yesterday a video. Maybe I will share it here again. Have a look.
And Dan, I think you agree with what Jim just said, right? You were concerned about the potential for a sell-off of as much as 20% when things got down to about 12%, down 12%. You said that maybe that was time to jump back in, but now you're thinking that there could be some more rough patches to come. Is that sum things up correctly?
Absolutely, Becky. I mean, if you go back and you look at time, bear markets, which I define as periods where the market's down, let's say closer to 30%, and there's about 10 of those episodes since 1920. If you go back and you look at those periods, you end up with these big bear market rallies in between. So the most comparable period, I think, is when Paul Volcker took over, 1980. You had a sell-off that started as he started to battle inflation, and the market went down 27% over a period of 21 months. But you had 6 rallies in the S&P of 8% on average, while you lost 27% of your money. And if you look at the 3 pretty high inflationary episodes, that's kind of what happened each time. You have these big rallies in between these drawdowns. And at the end of the day, inflation remains high. The Fed hasn't even started hiking yet or cutting their balance sheet and letting it run off. And that's still in front of us. And valuations are still near record levels. And so you combine all of that and slowing growth because of high energy prices, high wages, high rents. And I think it's way too early to say that this is the bottom, though obviously I thought it was a short-term bottom just given the oversold conditions.
So this gentleman is saying that, you are having this around 8% rallies, on average into a bear market that were also in high inflationary circumstances in the past, okay? And now let's have a look what the S&P actually have done since the last sell-off, okay? And let's have a look. This was approximately here. This was this really bad Monday, if you remember. We touched 4,200 and below 80, so 42.78, and then from there we recovered approximately 8%, right? And now it seems that we turn again. So this is quite interesting to see that everything shows us that we are here in the bear market. And I think that the next 2 days will be absolutely brutal, okay? It could be a sell-off because overall there's also a couple of short sellers that still were covering their shorts. So if the buying power will be removed, then we maybe go down to the price target of Root, who said, his price target is 4,450. So this means that we are somewhere going down to see a drawdown of about 3%. So let's have a look. It will be very, very interesting. Guys, this is all my day trading activities, watching the market, understand the market, talking about the market to you. Obviously, I'm still holding my long-term positions, specifically in space. Some people say, oh, are you still holding space? Yes, I do. I buy every month because those periods are great because it will lower the price. I can buy for more. I can reduce the price for my assets, and in the end of the video I will leave you here with another fantastic investor, legendary investor with a small wisdom for you to take to the Friday. So thank you very much for tuning in, and see you tomorrow, later on, obviously in the live stream. So stay tuned.
Bubble. We will have other bubbles.
We'll have other bubbles, I'll guarantee you.
Are we going to go back to the same kind of leverage?
Not for a while. We learn lessons, and they last for a while. And the deeper the wounds, to some extent, the longer they last. I was a beneficiary of that. I mean, I got out of school in 1951, and all my competitors were still worried about the Great Depression, and my memory wasn't good enough, so I had forgotten. This will have this will have an impact on thinking for quite a while in certain respects. But fear, greed, folly.
Not going to change.
We haven't gotten rid of those. We get smarter in all kinds of ways. We don't get smarter emotionally.
Why is that?
It's just the way the human animal's put together.
Yeah. The memory fades, and all of a sudden, the new temptation is there.
Yeah, and plus being greedy can be fun for a while, I guess. Leverage can be fun when it works. Yeah. Leverage is one of those things that works 99 times out of 100, and when it doesn't, it's all over.
How do you explain the fact that you always enjoyed making it more than even spending it? You enjoy making it and investing it, but not necessarily spending it.
Well, I have everything I want in life, so there's nothing to spend it on. I mean, I could have 10 houses instead of one. Would I be happier? No way. I could have 10 cars instead of 2 in the house. I wouldn't be happier. It would drive me crazy. I could have a 400-foot boat, and then I'd have a crew of 50 or 60, and some of them be stealing from me, and some of them be sleeping together. I mean, who knows what would be going on? So I don't. If I wanted to be a ship's captain, I'd gone into different professions. So I have everything in life I want.
And what you enjoy doing is studying where we are and understanding, trying to do the kind of analysis through conversations and reading and figuring out.
I love working with the people I work with. I love just viewing the human scene, but I have an ideal life. I get to do what I want to do every day. So, and money can't buy any more than that.